How do you get the lowest rate? Everybody wants the lowest rate. You guys think everyone's credit score here is the same? You guys think everybody's income here is the same? How about down payment? You guys think everyone's down payment is the same? Do you guys think everyone's interest rate in here should be the same? Yeah. Of course you do, of course. They advertise a lot and you see these pretty interest rates online. You say, oh, I saw that it's 5 point something online. To get this rate, you have to pay X amount of dollars. You have to put X% down. So the larger the down payment, typically the better the interest rate, okay? Most people right now are very rate focused. And on rates, people automatically think rate means payment. Rate doesn't automatically mean payment. People always say, well, I want the lowest rate because I want the lowest payment. That's not always the case. I can give you a loan, it's a 40-year mortgage, at a higher rate than a 30-year mortgage, but my payment's gonna be less. There's not a real big difference between 30 years and 40 years. They're both a really long time. The average person actually keeps a mortgage for less than 7 years. They refinance, they pay it off, they buy out a neighbor, they do something. That's a stat, less than 7 years. I always tell buyers up front, worry about your payment. Your payment is what's important. You can drive yourself crazy and call 10 banks to try and save a fraction of a point, but depending on the loan amount, it's not that big a difference. When you shop mortgages, we win or lose over a 0.125 difference. 0.125. So if someone's taking a $500,000 loan and my rate is 6% and someone else is at 5.8%, difference is $40 a month. Step one is getting pre-approved always, okay? You learned about getting pre-approved. We said it's free, it's quick, you go through a basic application. We told you there's no impact on credit, and it's kind of step one. Anywhere in the United States, you still get the same pre-approval process, the same paperwork. After you get your pre-approval, you're gonna hire a real estate agent. The process in general, from pre-approval to closing, takes time. When you get to the closing, you get the keys, which is the good news, but you have a lot of stress in between the process. Home buying is supposed to be easy, it's supposed to be relaxing, but it's stressful. You're gonna come with your relatives, you're gonna measure stuff, you're gonna do inspections, you're gonna do all kinds of things before you get to this closing table. Like I said, timeline. Once you're in contract, a contract means that you have gotten pre-approved, you find a property that you like with your real estate agent, you're going to bid on an apartment. Bid meaning that we're asking $1 million, your real estate agent's gonna be the local expert. They're gonna say, well, you know what? I know that a neighbor just sold for $960. We're not gonna pay $1 million, we're gonna offer $960. Your agent is gonna be your resource to help you put together offers to make sure you're buying something at a fair price and to make sure they represent you. Once you get an accepted offer after you're negotiating back and forth, you hire an attorney. Again, New York's an attorney state. You're gonna go into contract. Contract, remember, is when you put down the deposit and sign the contract, typically 10%. Once you sign a contract, if you're buying a condo or a house, it's typically between 30 and 60 days here, closer to 60 days. If you're buying a co-op, it's typically between 60 and 90 days. If you sign a contract today, you're probably not closing until the end of the year. It does take time, so keep that in mind. Building equity, tax advantages, stability. You're your own landlord. So pros and cons of everything. Statistically, they say people that own their own homes keep their homes in better shape than people that are renting. If you rent, you're paying someone else's mortgage most likely. Your money goes nowhere. You pay $3,000 a month for rent. At the end of the year, you just paid $36,000, it's gone. You did have a place to live for 12 months, and that's amazing. But if you own a property and you're paying the same $3,000 a month payment, a portion of that is going to pay down your mortgage balance every month. In mortgages, in the beginning of the process, more money goes towards interest than principal, but the longer you have the mortgage, more money goes towards paying down the principal. So if you start at a $500,000 loan, at the end of year one, if you're paying $3,000 a month, you're probably gonna owe $490,000, $480 the next year, and it keeps going down. It's a forced savings plan. Also, you can build equity because properties sometimes appreciate, so they're gonna go higher in value, which will help you to buy your next place. You may start at a starter property, then you may wanna go to a bigger property, or maybe you wanna buy an investment property. There's a lot of options to continue building equity and building wealth by buying more properties, and essentially we can help you do that. Getting started is kind of the first step.